Hello, everybody. We've got a very special guest here, an OG Hexagon named Dipcatcher, developer on the Ethereum chain and on the Pulse chain network. You've probably known him for a while. He's been building a lot of infrastructure and add-ons, Hex expansion packs, cool stuff you can do on top of Hex. So I love builders like that. It's all reflexive and helping each other pump all of our bags. And he's got a couple new coins out, and you've probably heard of those already, but wanted to put a name to a face here. This is Dipcatcher, aka Tanto Nominai.
Thanks for having me back again.
Yeah,
I remember the last time that we done a stream together. It's been a while.
It's been too long. I think it was around when you just launched the perpetuals, and then we all thought Pool Party was launching almost a year ago now. But Pulse Chain happened and the whole delays and everything. And I understand wanting to launch on both chains, rather and deploy on both chains. So it's smart that you waited, because you also got to work out a lot of the kinks. I think like you added the Hedron minting function and the com minting. A lot of people wanted that. But then this Gophers thing came out of nowhere. So what the hell are you up to, dude?
Yeah, I mean, it was like party. First we'd done it's probably like the third or fourth full iteration and like rebuild, and just trying to get it just right. And then during literally the party audit was going on, and it was supposed to get back on that Friday. I was supposed to get back Friday morning. It's now like 3 weeks ago almost. And then I messaged the auditor. I'm like, is it going to come Friday? And then they're like, probably not. Maybe later this weekend or Monday. So I'm like, okay, so it's just kind of sitting there waiting, everything's ready to launch. We're just going to wait for the audit to get back. And then, which there was nothing in the audit that they had reported. So it could have probably just launched. But then while I'm just kind of waiting around, I see, I'd heard about this 404 concept in the days prior. Didn't really take much action or do anything about it. And then Golkey did a little write-up on Twitter about it. And then I looked at one of the first 404 contract that had launched, and I'm like, oh, this is actually pretty simple and actually a pretty cool concept. And so I just made a very simple but really fun and awesome 404 contract called Gophers, and it stands for good old-fashioned unregistered security. And the only rule of Gophers is that you shall expect 10 gazillion% returns solely from the work of the Gophers executive board. So
right after the ceiling pull.
Yeah, after the roof pull, after the CFO rips the roof off, maybe the 10 gazillion% returns will happen. So yeah, it did truly come out of nowhere. But it actually kind of didn't, because the reason why I was so in tune with the concept of a contract that kind of blends aspects of ERC-20 and ERC-721 is because when I was building Pool Party, one of those iterations on the build was through something called ERC-1155. It's like a token standard that lets you, under a single smart contract, have both fungible tokens and non-fungible tokens. And with the party system and then those name tag auction things, I was trying to build it on that ERC-115 concept. 1155. And so I had for months already been kind of building in that space of single contract, NFT functionality, ERC-20 functionality. And so when I had, read the 404 thing, it instantly clicked to me that was a good approach to just, something for really more like speculation for the use case that I was building with Party. It wouldn't have quite worked, but so that was kind of what drew me to take action on that. And I think Gophers was it was definitely the first 404 on Pulse Chain. It was maybe the third or fourth one on Ethereum. It's been the second most liquid one on Ethereum. It's been by far the most liquid one on Pulse Chain. I think it was the first 404 to launch on two chains at once, which I love doing. Probably everything I'll ever build ever again is I'm going to launch on both Ethereum and Pulse Chain.
There's a benefit to that, just like how 9inch did that, and a lot of other guys, when they launched their meme coins, because you can siphon some users from Ethereum. I mean, especially when you're riding the hot trend. People that don't know, ERC-404s is half NFTs, half they add fungibility back, kind of. So it's like an NFT that you can trade on a DEX, basically. I bought one at like 600. I wrote it up to like 900 just because I wanted to see how it worked. I got the most common gopher, so I was not happy. But turns out you can sell it and rebuy it again, and then get a new one.
Mm.
But anyway, I just took my profit at 900, and I was like, I'm not gonna. I don't have the mental bandwidth to care about.
Well, nice trade. I mean, it and that's probably on Pulse Chain. So you only left a little bit on the table, and then it probably looked for a little bit that was a good trade, and then
Yeah, but now it's higher. So,
yeah,
fuck, man, who would have thought?
I guess the rest of the Gophers economy thanks you for leaving some meat on the bone for the little guys.
I'm not part of the evil Gophers cabal, so you don't have to worry about me, guys. No, it's cool though. Cute little Gophers. The name had me dying. It looks like I was trying to look it up on Deck Screener. It looks like someone already made a ripoff called Go Farts 404.
That's great.
Well done, boys. Well done.
Be careful with lookalikes on Deck Screener. Not every 404 has a chief financial officer, minty big bank borrower who will be a good steward of that liquidity pool. Not everyone.
I trust my entire net worth in that Gopher's hands.
Yeah.
That's a Gopher I can trust. I mean, you want to pull? I mean, that's not going to be the highlight of this discussion for the record, guys. But just so you know what's out there, ERC-404 composable or not composable. What would you call them? Tradable NFTs?
I'd say it's like it just blends together aspects of NFTs and ERC-20s. But probably the main thing, I think the real magic is just that it's a really rewarding experience to buy a token on a decentralized exchange and then anxiously await to see what NFT you got.
Mm-hmm.
Like that, I think is pretty magical. And the ability for it to be interpreted from like existing smart contracts or existing user interfaces as both an ERC-20 and an NFT, I think is also like a good compatibility piece to it. So, and then the liquidity like makes the like NFTs or like digital collectibles, it just makes the trading more liquid. It's almost like in NFTs, it's like there's like a concept of a price floor, and then sometimes they go at a premium. But this one, it's like the liquidity pool is like the price floor. And then
it seems like a better way than having to list it on like OpenSea and then try to get attention over there. People don't always want to go to a new platform, and yeah, you've got a lower supply but much higher price, and it's got $7 million of liquidity somehow already, which is pretty cool. But it just makes more sense to me, like to trade things on a DEX. Then again, I'm not an NFT guy anyway, so it's cool.
You were temporarily you were an NFT guy from $600 to $900.
I was. Someone gifted me a Tang Talk as well, which are pretty interesting. Like you can actually chat, you can send a message via an NFT on IPFS, and I think it goes cross chain, or it's about to go cross chain. So like, I like when NFTs do something kind of interesting. I'm not hoarding my whole investment portfolio full of NFTs, but some people have, like last cycle, there were hedge funds that would invest in NFTs. And I know a guy that ran one and was profitable by investing in punks and all this stuff. And it's like, man, if you try to tell that to anybody that works at Goldman Sachs, they'll just laugh right in your face. But it's the real thing, guys. It's like people get into whatever they're interested in. So
yeah,
there's some other ones like RH404 is out there now, and I'm sure people have
after Gophers, a lot of things are trying to kind of replicate the magic, but
quite the trailblazer you are, sir.
Well, thank you. I hope that everyone who does anything on chain has success, but as always, be careful.
Well, you were also, I know there's another pooled stake project out there as well, but that could lead into our next topic. You guys were the first to do pooled hex staking. And that's, well, I mean, I don't know if you were the first to launch, but the concept, as far as I know, is, you came up with this a while back. For people that don't know, if you're brand new here, you could do hex staking, right? And then the real thing that determines how much yield you get with a hex stake is how long you stake and how big you stake. Now, most people, average people like you and me, yes, even me too, even the OG, I cannot really benefit from bigger pays better like, an institution can. You can only really benefit from the bigger pays better bonus if you have millions and millions of hex, meaning the average retail user, like all of us watching, can pretty much only benefit, increase their yield in hex by staking longer, adding more days to their stake. But if we all pool our hex together in a smart contract, we can actually act as if we're an almost institutional grade money in a decentralized fashion, and we could all buy into one hex pool, and that would earn us even more yield from the bigger pays better bonus. You also have benefits like instant liquidity, meaning you can then take this pool representation token of your share in the pool, and if you want to get rid of it early, or if you want to transfer it to a different wallet or do liquidity providing with it, you can do all these things with your instantly liquid token, whereas you can't with your hex just locked. So some people like that. Some people say, oh, I don't like that because I don't want to be able to nuke my bag early by accident, because, if I've got paper hands, what's stopping me from just dumping this token when I get scared? And that's the flip side of the coin. But it's a good option. It's a good hex derivative, we call it. And I'll let you kind of explain anything I missed.
Yeah, I mean, probably to me at least, the motivating factor for building it, and what I think is the most valuable aspect of it, is that you as the user don't have to pay for your gas to end stake. So the long stakes can really add up, that gas you pay, because every day that goes by, it's a little bit more gas. So a max length stake is more gas. It's twice as much gas than a 7.5 year stake. And so those long stakes, it makes a really big difference there. And even on Pulse Chain, it's going to, because as is, only 2 max length stakes can actually fit in a single block, based on the gas limit that Pulse Chain has. The gas is pretty low right now, but especially as there's tens of thousands or hundreds of thousands of long, 10-year plus stakes are ending all at the same time in between the years like 2034 and 2037. The gas just from the hex stakes alone could be quite high. And so the pooling, I think, is very important for saving on that gas fee. Like, you as a user, you don't pay any gas to end your stake. And you can just roll into the next stake, because these stake pools, once the stake ends, there's a period of time where you can add new hex to the pool or redeem your hex, and then the stake starts again. And so you don't even need to take any action. You can just sit in through that, and you don't have to do anything, and you just roll into the next stake. So for a user's perspective, the gas fee savings are quite substantial.
Yeah, you always champion the gas fee savings use case of the contract, which to me was the last of the 3 that I got, that I kind of understood via, well, just like when I first look at the project, I'm like, oh, more yield and tradable stakes. It took me a while for that to sink in, that gas fee savings is potentially one of the best use cases, because Ethereum made it evident that was one of the best use cases. You could even say that pooled hex staking almost solves the Ethereum gas fee problem in general, meaning in theory, like, you wouldn't even have needed to make Pulse Chain if everyone just made pooled stakes. Now we've got Pulse Chain, so it just is what it is. But people also don't realize that we stake on multi-year timeframes. I mean, hexagons, people that really believe in this protocol for long term. So people that have 10-year stakes, even on Pulse Chain, if Pulse Chain does 1,000x or a 10,000x return in 10 years, it's very possible in 10 years. It might not happen in one cycle. It might take 10 years instead of 4 or 5. But we're going to have gas fee problems again, probably in the future, even though the fees are still 1,000x cheaper on Pulse Chain than on Ethereum. So you're planning for this future problem that happened on Ethereum already. But people, do you think it will eventually happen on Pulse Chain too?
Yeah, if Pulse Chain's successful, like, if there's no demand for blocks, then there's no demand for PLS, then it won't really be an issue. But if there's high demand for PLS and high demand to use Pulse Chain blocks, then there's almost no way around it for contracts that are immutable, that can't just move to an L2. Like the hex staking, it really can't just move. It could be maybe like an RH supported or RH created fork of Hex that maybe copies the party Hex or the party staking model, which is where that you can stake your party token. We can get into this later, but you calculate how much you earn up front. You don't have to go and calculate every day your T-share earnings. That solves, like, there's no issue. That's why party staking max length is 100 years, and 100 there was no cap. I just called it 100 years for fun, pretty much.
Yeah.
But so there could be some type of like Hex V2 to solve that. But honestly, I think it's actually a pretty good dynamic to have that type of deflation, because a lot of these Hex stakes aren't going to be feasible to end, and that's supply that currently the market is pricing in as existing in the future. But as time gets closer, and then now, okay, the market was projecting there to be X% inflation over that period of time, but now like a bunch of stakes are not feasible to end. Now the deflation decreases, or the inflation decreases, then that is pretty bullish. So I actually I like that there is the chance that a user's stake may end. It sucks for that user. It really sucks, and that's why I built the stake pools, to help solve that problem for that user. But as a whole, it's honestly a pumpamental that that the Hex gas costs so much. So it's
you want your chain to be a victim of its own success.
Mm-hmm.
That would just mean that everyone's using it. But you've also got other add-ons, let's call them Hex expansion packs. You've got Hedron and Communes. If Communes plays out the way that we want it to, it's going to increase the average stake length and could potentially make Hex deflationary if all anyone ever does is take max length. And it's hard to imagine a world where people care more about Com than Hex, but because they're intertwined, it doesn't matter anyway. And with Hedron as well, you've got people, at least in the beginning, were minting a bunch of max length stakes as well, kind of taking a lot of supply off the table, increasing the average weighted stake length in order to mint their ICOSA coin. And you've got V2 of that coming out. So all these things playing together, these Hex derivatives on top of yours, it's really cool to see. I mean, I like to see people building directly, I don't know if you could say on top of, but adjacent to Hex. And, Hedron as well, they've got, speaking of NFTs, right? They've got financial NFTs such as tradable stakes or Whatsa NFTs that are ICOSA minters in NFT form. So you do have all these crazy use cases happening on Pulse Chain of NFTs. You even got I'm about to, after this stream, gonna reveal the winner of Hex.toys. He's got a lottery going on, and it's for his new composable NFTs, heart-heads.com, I think. And so that's just another use case as well. So it's really cool to see all the innovation happening here. I don't think people realize, how much is happening on Pulse Chain.
Yeah, and all this happened during the bear market. I mean, Hedron launched in like February or March of 2022. Maxi launched in April of 2022. The perpetuals, so Base Tree, Lucky Desi, that was September 2022, and then Pulse Chain launched last year, and all the other stuff. So it's like we kind of rounded out the whole bear market, kind of adding on to Hex. Com launched in last summer or so.
Yep.
So like that to me is a good sign for the Hex ecosystem, because like there's a lot of coins that maybe had a high performance, but then first bear cycle, everyone's gone, like nothing changes. And so, but whereas you look at Hex from the past cycle to now, there's like a whole financial ecosystem around it. There's, all these other things. And so I think that that's a promising sign for the future, is that like the bear market created, generally de-risk the, because like everything that adds benefit, there's that some level of de-risking. And so like if you go from cycle to cycle and you de-risk every cycle, then that's like a good way to grow.
Yeah, I mean, you've got people just running away and hiding during a bear market or rage quitting forever. But instead, over here, you had people doubling down, which I haven't seen before. Bear markets are the time to innovate. Unfortunately, most people don't want to, because it's not the sexy thing. Everyone runs off to AI or whatever the hot new narrative is. Or, we do have I want to get into the airdrop. That's why everyone cares about the airdrop, right? The big buzzword of the day. But Boredom has got a question. If stakes aren't able to be ended, do we have any pushback against people calling Hex a shrimp trap? I assume you mean shrimp being smaller people getting trapped because of gas fees?
Yeah, I mean, I guess, it kind of is like, and I think that that was not that I was upset, because honestly, like every single person that doesn't stake in the Hex stake pools boosts the potential value for the people that do, because if their stakes are not feasible to end, and well, in some cases the penalty may not even be feasible to collect, if like the late end stake bleed out penalty. But for all the Hex that is now not competing on the sell side and is not being minted as inflation, that loss goes directly to the users who can end the stakes, and the users who are most likely to end the stakes are the stake poolers. So I make sure that there's a solution for those people. But things like the ICOSA thing that you just brought up, that was, I remember doing like a head-to-head comparison. We had about 10,000 users in Maxi, and then the other stake pools. So 10,000 users with 5 stakes. ICOSA had something, I think 12,000 users in 12,000 stakes. And so, or not 12,000, it was like a couple thousand, it was like 8,000 users in 12,000 stakes or something. And so that almost undid all of the gas fee savings, like as an aggregate that our stuff, solved. But what that did is it created a bunch of these max length stakes those are now valid T-shares that are earning every day, but many of those are not going to be feasible to end. And so it's like absorbing Hex that then is not going to come on the market at the same time that our stakes are ending. And so if all those stakes are now null, then that's just boosted value for the stake pool.
Deflation, kind of. Yeah, because you got a bunch of tiny max link stakes over there.
Yeah. And same with if once people are doing solo staking just to claim their COM, then it just creates more of that. So it kind of like that. That's why I never recommend. I actually stopped recommending staking Hex during the bull run, like early 2021, even before the gas fee issue, because I'm like, okay, the price has been going up so much. Like this is far greater than just multiplying it by your earnings. It's like, so a lot of people that I, not on Twitter, real life people that knew about Hex from me, they really weren't that active staking, because I'm just like, okay, just hold the coins.
Right.
And so that I think that if state, I mean, that's kind of a clever word, the shrimp trap. But yeah, I mean, it's more just like there's square risks involved in the design of the Hex staking mechanism that can cause small stakes that are long to not be feasible to end.
So, and you don't even know what's considered small in the future.
Yeah, I mean, price solves a lot of it. Like the higher the Hex price, the more that are feasible.
Safe.
Yeah.
It's funny. I mean, I just feel very comfortable doing native Hex staking. I haven't done a whole lot of HSIs. I do hold a pretty good sized basket. I think if you add my T-shares from the perpetuals, it's like maybe 1/5 of my total T-shares, which is solid. But I feel like you're living in this world because you're the creator of this. You've already crystallized like the vision of the problem in the future, whereas I don't spend enough time thinking about that. So it hasn't hit me how important this will be, other than, oh, I like the cool use case now. I kind of have a bias towards now rather than the future. Yeah, but people are going to care a lot. Just like people might care about HSIs because they like the ability the security benefit of, if your wallet gets hacked, maybe you can beat the hacker. Same thing with perpetuals. Maybe you can actually beat the hacker so that he doesn't emergency end stake all your Hex like an idiot, because that's what they would try to do, because hackers aren't the smartest usually, or they don't care. You can just send it to another wallet that you own.
Mm-hmm. Yeah.
Security benefits is another.
Matty Allen had a pretty cool use case of holding DESI in the time pays me thing. So like using that, I think that's a pretty compelling security boost to your stakes, where it's kind of that I view it kind of, it's almost like a kind of multi-sig type of thing where you can kind of hold it in a contract that has privileges around how it moves. And so I think that's a pretty compelling use case too, that I think solves that kind of what you brought up earlier about people that kind of need protection from themselves, with the liquid token that represents the Hex stake.
Unfortunately, the people that need the protection won't be the ones tech savvy enough to be cutting edge. But It is cool. That Time Pays Me is awesome because you can lock the DESI in there and have an emergency address where you just click a button to say, "Hey, my wallet got hacked," and it'll automatically send your vault. Basically, Time Pays Me is a vault, a time locked vault. It doesn't earn you any interest, but it protects you from your own psychology. If you say, "I want to hold this for 7 years," you won't get tempted to dump it for meme coin of the week or whatever. Let's start talking about the actual pool party token, right? Like, do you want to share your screen? Are you able to do that right now?
I can't. Let's see. What would be?
I can as well. I just don't want to log my wallet in. And show you guys all the dirty secrets. No, I'm just kidding.
I'm on a different computer than what so I don't even know if I have MetaMask here. Let's see.
Well, so while you're looking for that, people that basically anybody that held a perpetual token is eligible to receive free party, and it's already been out for a week now, maybe a little over a week. I don't know, but on Ethereum and Pulse Chain, don't forget to claim on both chains. If you held DESI, if you held Maxi, if you held Base, Trio, or Lucky tokens during the snapshot, which was taken a long time ago, you'll have to check the website to figure out if you qualify. You're going to get free tokens on both chains. Do not forget to claim them. I already claimed mine. I was very, very happy with it was a pretty good amount. Just one of the many great airdrops that we've had here. And if you want to know the link, it's hexpool.party. Launch the app on hexpool.party. Let me post that in the chat. Show us the skeletons coffee. Yeah. No, you guys aren't looking at my wallet. I know how bad you want to. You want.
Yeah. So so the airdrop. So not only if you held any of those basically if you've participated in anything I've ever launched, you got some airdrop. Some things got more than others. So basically the two groups of people that got the most out of the airdrop were people that had deposited ETH into either the Polywater contract or the it was called name claim. So name claim was the pre-launch way you could reserve these ticker names. So a lot of these ones that you see here on the screen, you could claim your name beforehand. So if you had deposited ETH in any of those contracts, you got you got a good those people got like their cost basis was like something like less than a cent. Now the combined price is about 6 cents. So those users are doing pretty well. And the reason why is like basically the way that I was approaching this was that like the users that took on the most risk and got the least for it were the ones that got the most from the airdrop. So water, that was most risk possible. Zero. There's just basically a donation.
Yeah.
So that one got the most. And name claim, they ended up getting their names effectively for free, and they got their coins too, more than what they would have based on the original launch plan. And then team was included in there. If you held team as of like the Friday before the launch, and Gophers was included. So because those are like kind of the four of, because like base, there's like no risk in that. Like you get your coins back by your hex. It's not like a high risk thing where you had to really part with anything to experience it. And so that was kind of how the airdrop. And so maybe a lot of yours came from team, or if you participated in the name claim thing, that might have been.
It's probably team for me. I did not do the name claim, but I forgot that team. I was also involved in that. So yeah, anyone that was also involved in the team token or the the water token, which was like you said, just almost like giving up your ETH. But that's really nice. That those people probably should be rewarded pretty high. I did not do name claim. I did hold a gopher. I don't know if that factored in for like the couple days I had it. What was I going to ask though? I had a question that I just lost.
You probably didn't get Gophers because the Gopher snapshot happened when the price was like 1,100.
Yeah, no, not me. That's okay, guys. It's all right.
So if you go to the site, if you think you qualified, go to the claim airdrop page and connect, and then it'll tell you if you are eligible to claim. So yeah, it's just app.hexpool.party. But if you're just learning about it, go to hexpool.party and then read about everything there, and then from there go to the DApp.
Yeah, it's pretty easy, guys. If you If you just go to the website, it's just like the first thing on the website.
So I guess we can kind of go through. So Party has a couple different, there's like the whole Hex Stake Pooling aspect. So here, why don't we start there? So kind of how we launched a handful of Hex Stake Pools. Anyone can launch their own pools. So currently there's been about now 1, 2, 3, 4, 5, 6 of these have already started. And then there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 pools that are you can currently join. And so they're of different lengths. And so you can join these, and they're just like it's basically the same contract as like Base or any of the other perpetuals, except a little bit difference in like the fee. Like on the perpetuals, team got some of the yield after the fact. But in this one, there's an optional organizer fee. Some are 0, some are, I mean, this one's 5%. And then 0.5% goes to party holders as just an incentive to grow these pools and support the pools. And this one, the big difference between this and team, because we tried to look at things that work well in team and what could be better from the team system. And I think the year-long staking cycle in team, that's very long. It does help the earnings, but that's quite long. So with party, the reward distribution is every 2 weeks. And it happens up front because the thinking is that that people who are in pool party earning Hex, they're getting some Hex up front, and then now they may want to be buying some of these pools that have just started the stake. So that fee was designed to encourage people that are earning this Hex to then inject it into the buy side of the liquidity in the stake pools. So that was why that part was changed from the perpetuals. But other than that, it's basically the same. And so if you hold your party tokens liquid, you earn Hex from the stakes, and then you also earn COM when the stake ends. And then party itself, you hold it liquid to earn those rewards. But if you stake your party's burnt, so you're not included in that reward snapshot, but you earn more party. And so, do you see the little menu that pops up here on the screen share?
I don't.
Okay, I don't think that it appears. For instance, you can choose from. There's like a menu of stake lengths from 15 days all the way to 36,500 days. And so if you have, I don't know if that appears. Yeah. So right there, you see that on a 100-year stake, you earn 9,900% yield. So you basically 100x your principal on a 100-year stake. And it's less for shorter durations. So you can stake your party to earn more party. There's no early end staking. And when you're staked, you're not earning those Hex or COM rewards. So if you think that there's like a period of time where there's going to be low earnings from the Hex and COM, you may want to just stake your party so that next go around, you now have more party to earn more of the Hex and COM from. So there's kind of a balance of you can choose to earn your yield in party, or you can choose to earn your yield in Hex.
I mean, there's no emergency end staking penalty, or there's no ability?
No ability to.
Okay.
It's a very serious commitment.
Cool.
Yeah.
Yeah, so guys.
That's like the party staking.
Very interesting. Yeah, all these ticker symbols you're seeing, guys, these are stake pools that anybody can create. You can go make your own if you want to. There's a guy out there called Naeem is his name. He made this quarter one. He's had this planned for a long time. Every pooled stake has a different ticker symbol, a different emoji logo. It's got a different day length. Quarter is 90 days. It's a quarter of a year. And the organizer fee goes to the team holders. Now, does it also go to the party stakers?
Yeah. So
party holders,
0.5% fee that goes to party holders, not party stakers. Party stakers don't earn the Hex rewards. They're earning more party, but they're not getting the Hex rewards.
But on this screen here, it says 0.5% organizer fee goes to team.
Yeah. So that he pasted in when he was setting up the pool, he pasted in the team address as the organizer. So team gets that, and these other ones, whoever whoever deployed it is the organizer. But for both Quarter and actually Tribunes, I know that they had added the team contract as the stake pool. And I have some ticker names that I had claimed that once kind of this first wave of like user organized pools kind of calms down, I'm gonna do some more team pools. And so, but yeah, any address can be used as this organizer fee, and Name just decided to use the team one.
Awesome. Yeah, I'm trying to load. It's a little bit slow loading times right now, but I'm sure you know about that.
Yeah, I'm right in the middle. I'll probably push out something that'll make it load a little faster. And yeah, I need to. This page will change a lot pretty soon.
All good. All good. I'm just reading right now. It says, 0.5% of the fee will go to the party platform and 1% to the team contract. I'm looking at Tribunes. So they divvied it up in a way that they purposely, they planned ahead and stuff. So you can do all that. When you create your pool, I haven't tried it yet. When you create a pool, do you get to choose where the rewards go?
So that organizer fee you can set. And so, and you can set it anything from 0 to 99%. So it's more like, I mean, it could have added a limit, but it also adds like kind of a dynamic to it where people that might want to just like launch a coin that is like not a hex stake pool, you could kind of do it like that through a 99% one, where it kind of like isn't really backed by the hex stake. It's really just a shit coin.
But so all the rewards would have to go somewhere, but 99% would go to whatever they choose, or
yeah. So both the organizer fee and the amount that goes to the party, that happens when the stake deploys. Mm-hmm. So it's all handled up front. So if you wanted to launch, like if you wanted to raise money that goes to you could set an organizer fee of 99% to your own address and then launch a pool and then try to get people to participate. And just using this as like a mechanism for that was why I didn't add any type of limit to that organizer fee. But
it could also be a benevolent thing, like a new mystery box type of deal.
Yeah, that's kind of what, if you set like a half fee, now your coin is backed by half by the hex stake, and then there's hex that maybe that user, like the organizer, maybe they just put it on a liquidity pool, and that's why I add some flexibility, and I'm actually interested to see how those organizer fees are included, and similarly with like the party reward being upfront from those, it was the same thing there too, where because the original plan was gonna be to just mint extra inflation and give that to the organizer, but then that puts the organizer like on the sell side, and if anything, I would rather the organizer be on the buy side, and so that's why they get the hex instead of just like minting extra coins for them.
Yeah. That all that hex from the fees too is just coming from the input, the original hex input into the yeah.
And so something that I don't know if you know Hex Geta, he made the Look Into Maxi website. He's helping make like a calculator that shows like, so when you look at the organizer fee, because some like say there's like like some stakes below some length, if the organizer fee is too high, they won't earn back what they paid in the organizer fee, and so those ones you might not want to join. And so adding more details around projected earnings relative to that fee, that's going to be added to the site pretty soon. Because
like the 91 days thing with an organizer fee of 5%, that's going to be higher than the yield.
It probably won't be, because rule of thumb is that it comes out to like just under 1% a month.
Okay.
So that's 3 months. It's
3%.
Yeah. So that one will be like about, effectively like 2.5% earnings instead of the 3%.
Oh, because it's 5% of your input, then it's earning 3%. Okay.
Yeah.
Never mind. So it's you got to do some math to actually figure that out.
Yeah.
What is the name tag NFT stuff?
So all these names, the name tags are part of like a unique name registrar, just so there aren't a bunch of stakes with the same name and confusing people, or just like, and so the way that you deploy a pool is that you have to have one of these name tag NFTs. And then when you deploy the pool, that NFT is effectively burnt because it is sent to the stake pool contract, and it just sits there forever because these stakes repeat, and so it's just there forever. And so that's just to kind of keep the names unique, and to add some kind of deflationary pressure on those NFTs. You make them more scarce because as they're used in the stake pools, the NFTs that are related to the words become more and more scarce. So, that's what the name tag NFTs are. There was a period of time before the launch where you could claim a name. That is now over, and so now the only way to get them is through these auctions, and these auctions go on. So here, let's just say I want to start like maybe there's like a coffee we wanted to. So coffee's unavailable. So that someone must have already got that one. She says
somebody got it. I remember them asking me if I wanted it a long time ago during the name claim.
So let's say cheese. Cheese is available. So you'd enter some amount. I'm not connected. So you just start this auction, and then the minimum bid is 17,000 party. So these are actually quite expensive right now. One, because less is more in a way, like more people and fewer stakes. And so we really only wanted people who are serious about organizing these pools, who are going to try to grow them past some point to where like maybe they can make it back on the organizer fee.
Yeah.
And so, and just to kind of bake in some more scarcity with these NFTs.
The party token.
Yeah.
Well, you're paying in party token. Where does that party go?
Well, so it gets burnt when you're auction. So
cool.
So this is very much inspired by the Hedron HSI auctions, where the Hedron is burnt. There, if you bid in the last couple minutes, it extends some time. When you bid, it like remints coins back to the person whose bid you just exceeded, and then the end one is burnt. This one, the only difference is that this has a like every time say you bid 17,000 party, each next bid has to be 5% larger than the prior one. So no nickel and diming. I ask me how I know this, but with the HSI auctions, there's serious nickel and diming that goes on with those because you can just increment by a tiny amount. And so
that's what V2 is supposed to fix, I think.
Yeah. So I think that'll, so things that I picked up from learning about the HSI auctions went into this NFT auction system. And so
it's good. It adds some scarcity to party while at the same time adding scarcity to the NFTs and charging a not trivial amount. Like that's a $600 name. So it's just enough so that people can't scoop up a whole bunch of them. But but if you want one, it's probably available and you can buy it.
Yeah, I think that there were like almost 100, or no, there's 70. I don't know. There were about 100 claimed beforehand, and then so far, at least on Pulse Chain, there have been 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 here, and then so how much party has been burnt? So we have 17,000 times 1, 2, 3, 4, 5, 6, 7. So plus 100, and so 210,000. So that's 300,000 party has been burnt from these auctions so far. And what's the price on Pulse Chain? Like 5 cents?
4. Oh, wait, hold on.
4.8.
Yeah.
4.8. So that's about $15,000 worth of party has been burnt in these auctions so far. So,
cool.
So it's if these name tags, like if they on their own, even separate from the Hex Stake Pooling, if those become just like something that people want to collect, or maybe there's some other use case that appears for them, that could be a pretty big deflationary piece for Party.
Yeah, people could be, arguing over these names. I mean, it looks like some of the popular ones are already being sold. Gophers, Hart's Law. Hex Squid has a question. How often can party stakers claim their earned party?
So whenever your stake ends, you claim your principal plus your yield.
Just once, right?
Yeah. And you know how much you get when you start your stake. It shows you exactly how much you're going to collect at the end.
That's nice. So just a flat rate.
Yeah, it's like it's an exponential equation. There's a whole, I published like a Notion doc about the equation, and there's like a calculator that's embedded in there. But yeah, it's just a simple equation. Nice. And it's meant to be where longer pays much better. And so like, the 100-year stake earns 100x, and, but a 1-year stake earns like, let's look at it. It earns like
I'm not surprised that you made it more complicated than a hard-coded single variable.
Yeah, well, it's just the way Solidity works. It actually doesn't like, you can't really do exponents, and so everything is actually, it was pre-calculated beforehand, and all the yield math is actually in a Merkle tree. So kind of how airdrops use Merkle trees, like it's a Merkle tree where you claim the airdrop from. So like the math is like pre-computed, and there's these things called yield scalars. And so you just like, basically when you start your stake, it like looks up in the Merkle tree, the yield scalar per unit staked, and then that's what you get. And so,
wow. So that's why you have a finite number of years. Yeah. Okay. Yeah. And so it's not, you can't, that's kind of why Hex had to be done the way it was too, by simulating compounding.
Yeah, the share rate kind of simulates the compounding. This one, it actually kind of like directly compounds, like the 15-day stake. But
you said you only have a limited number. You only have 100 options, right? Or
it's like 100 and 1, 2, 3, 4, 5. Because 1 year through 100 years, 15, 30, 90, and 120 days.
That's pretty cool.
Yeah. And so I guess this brings up a point about the inflation of party. It's actually going to be quite low. Like in the first year, if assume 100% of all party was staked for 1 year exactly, the maximum inflation realized year on year, so like as of next year, would be 2.38%. But since like nowhere near 100% of the party is going to be staked at all, and not all of it is going to be staked for 1 year, the realized inflation for this next year could be quite low, and it may be even less than what has already been burnt in the auctions. So the year-on-year inflation of parties from the staking is actually very low. It's much lower than Hex.
Cool. Oh wait, so I just remembered something. You used to have an algorithm in the form of an NFT called the Dip Catcher algorithm, and I know people were able to buy these NFTs. Did those guys get airdrop too?
Yeah, they were included in the airdrop as well.
Cool. So among the suite of Dip Catcher products, for people that don't know, you've got this algo that's been timing the market pretty well. I don't want to get too distracted from party, but do you want to show people your Dip Catcher thing and see like what the market's telling us?
Yeah, let's see if I have it on. I don't know if I have it on any of the. Let's see. So I guess here, I'll just pull up on this one. We'll go to pro.dipcatcher.com. So this was like a limited release of where you could buy the Dipcatcher Access Pass, which technically isn't an NFT. There's this image here on the site, and then you're saved in the contract as a member. But there's actually not an NFT. But what it did mint you is you got your Access Pass, and then it gave you a DCA token. You actually can't mint anymore. This was because it wanted it to be like a fixed supply. So as soon as 30 days went without any new minting, it actually stops minting.
Oh, wow.
The DCA supply is now fixed, and it gets burnt every time someone requests access with that. And so the way that this was set up was, it was like basically like a revenue share. It's like a 50% revenue share. So like selling the software product, and then, which is the trading view algorithm. And then, so people could mint that. So if you bought it, so the last mint rate, the mint rate ratcheted up every like 100 mints or so. And so I think something like 700 people bought this.
You have to have a full one then, a full DCA token to get access.
Yeah, you have to burn a full DCA token.
Or you have to burn it. So that ensures that you have permanent access.
Yeah. So when you burn it, you get added to this member list. And then I have something that I have like a dashboard that shows me all the new members. And then I have an alert every time 10 people have requested, I go and add them all.
Gotcha.
So like, I mean, like the latest price. And so at the Ethereum price, it was like what, 2,800. People were buying this for about $126. And so what that got you is, it got you access forever, and it got you a buddy pass that you could then either give to someone or sell on the decentralized exchange. And I think the price has been around $60. So it's like basically like you got one, and you got one for free that you could sell. So
wow.
And the DCA token itself is pretty scarce. And there's going to be no more of this minted. And so it kind of capped the number of people that could have access to that algorithm.
So it's a trading view algorithm. What happens if PineScript gets updated, or how do you make updates to that?
So I can update it. Updates to PineScript don't impact it. Old versions of PineScript continue to work. But yeah, so it's just where, I think PineScript has updated since this has gone on, but it still works. And every so often, I mean, I haven't made an update in a while, but sometimes I'll go and maybe add like better like notes. And so there's like one where you can click, like there's a setting where you can like have it display notes about what you're seeing on the screen. So sometimes I'll go and like make things more clear or something. But I guess that one, which I've kind of put this effort on the back burner a little bit with like Party, trying to get that to the finish line. This one, the dip catcher algorithm, it only shows you a buy signal. It doesn't give any type of sell signal. And
I love that.
So the reasoning has always been that selling is like a very personal decision. And it's a lot harder to tell someone when to sell than when to tell someone when to buy. Like knowing when to buy, it's, because worst case scenario, you buy and then the price goes down. And because this has such like a pretty strict like rules around when it is a buy zone, even if you buy and it goes down, like historically across all the assets that I track with it, you're only in the red for a little while. Whereas like if you tell someone to sell, price could potentially run away from them forever. And that's a much tougher decision to make. And it's very personal. It really comes down to your own personal situation. And that's like each person's own like individual strategic discretion. Like, and that's where like the winners and the losers are separated, is like you alone having the insight that like an algorithm isn't gonna be able to tell you. So that's why this one hasn't had one, but I have built a version of this that's both a dip catcher and a pump dumper, and it actually performs really well. So that one, the dip catcher users are going to get a new algorithm. It'll just appear one day in their trading view at some point, once I do more testing and more refinement. But
pump dumper, I love it. Sounds dirty. You got. Will you grace us with showing the secret almighty algorithm?
Yeah. Okay. I think I can pull up.
I know you post screenshots all the time, and that's kind of where I get some of my technical analysis from. I was too cheap to buy one, so I just follow you on Twitter.
Well, you can also make kind of a bootleg, like just with, if you modify the Bollinger Bands and kind of bring in aspects of average true range, you can kind of.
So that's what it's based on, just those two?
It's not full. It's more like Bollinger Bands, but kind of a different approach to it, where instead of doing Bollinger Band about just like usually Bollinger Band is based on the low price, or not the low, the close. So whatever time it was at 0 UTC, this is more based on the whole range that it traded in. and it factors in the like the range high and the range low, and then those range highs and lows and some statistic analysis on how those change over time. That's what goes into the actual buy signals, which are pretty effective. So here, I'll share
Cool.
it. I have it pulled up on another screen.
It's like, I don't think anyone's going to understand what that means enough to recreate the algo. But that is interesting. So you recreated based off average true range. You also calculated the rate of change of that?
Yeah.
And that's how you invented your own rain, or your own cloud, kind of?
So kind of like there's a like a dip zone that is a result of how the like ranges are changing relative to each other, and then and like where they are based compared to how it was over the last like 30 days. So here's like the one on the daily chart for Ethereum.
Could I show this?
Yes.
Okay. Alpha, everybody. Pure alpha, unadulterated.
And so this is on the daily chart. So the default setting here is 30 neutral. There's different settings. You can change how many periods to look back. So I like 30 neutral because I like looking on the daily chart. So it's basically like on a per month basis. And then there's the outlook, which is like neutral, conservative, or aggressive. So if like price is in a raging bull run, maybe you want to add aggressive if you want to be buying, because then it triggers buy more often. So
I see.
bull run, it'll capture more of these, where if you go back to neutral, like look right here, like those ones, for instance, if you go back to neutral.
But in a bull run, wouldn't you want to be conservative?
Well, if your goal is to buy, you may want to be more aggressive in a bull run, because like if you haven't already bought, like if you're looking to buy and it's a bull run, you may want to be aggressive, because from here it signaled buy during this COVID dip in 2020, and then it didn't signal buy again until nearly the top. Whereas if you went aggressive, you could have, it signaled buy here again.
Right, I see.
And then it continued, so aggressive means that it'll give you more buy signals, but there's a higher chance that price goes down after. Neutral gives a little bit less, and then conservative gives even less. But it does miss out on some. So like that's kind of the trade-off. Like, I mean, even though this one nailed the bottom, like it tends to do that sometimes, just completely nail the dip. But so it kind of lets you apply your own discretion to it. I like 30 neutral. And so it looks really, I mean, the Ethereum chart looks good. Even like on the Hex chart, let's just pull up Hex. So, pretty effective at rounding out these lows. And even if you look at it, like even when the price is high and it triggers the buy zone, you're at the very low end of the buy zone. So like the all-time high in Hex was 52 cents. The first time it triggered a buy was when price was 20 cents. So that was like a 60% dip. And so,
if you want to be safer, you can wait until the blue zone extends for a couple periods in a row. Like if you just get a thin little slice, that might not be enough confidence for me.
Yeah, exactly. Like seeing how they stack up against each other, and seeing like numerous bands. Like maybe there's kind of this first little wave here. Maybe you want to wait till the next wave. And then, so because here it's like there were like kind of three of these waves. But I think that like outside of just the statistical analysis it does, the way it kind of just like marches down and like rounds out the bottom and then kind of resets its equilibrium and kind of waits for like a new wave down, that actually helps. Like if you were to dollar cost average across these, then you get like your average, would be, pretty low relative to the moving average across all days. And the way that this was designed was that, like, at least the thinking is that if you were to just look at like the moving average, like say the moving average over a month, and you imagine that every day is just represented by a single buyer that day. And so if you ranked all the buyers of that month from top performing users to lowest performing users, where top performing people are the people that got the lowest price entry, then You have those 30 days. And these are based on standard deviations. And so like one standard deviation is, like what 50% of users are captured in that plus and minus standard deviation. And then like 95% of users are captured in that second range. And so if you're in that top standard deviation, that means that you're in like the top 2.5% of all buyers in that period. And so like, as long as you aim to be at least in that top quartile, then you're probably going to do just fine. And so what this really does is it prevents you from like you'll never, ever, ever see the dip catcher algorithm telling you to buy when the price is like on a relief pump. Like all the buying is like in big waves down when price is like much lower than where it was in the months prior. So like it definitely helps you prevent like buying into raging pumps that are just going to go down right away.
Do you have like a I guess spreadsheet or something showing a hypothetical DCA and how much you'd be sitting at? Because look into hex.com is actually showing we're actually sitting at about combined hex of 2.6, 2.7 cents, which is the exact same as the global average price, like for the total time length of hex that it's been around. So I mean,
yeah,
that's
yeah. Here, maybe let me hide my screen for a sec, and then let me see if I can, because there's a back tester here. Let's see. Let me see if I can.
Yeah, that's essentially what I was asking. Back testing would be cool.
So I'm not logged into my pro account on this computer, so I can't show the back testing thing. But I mean the one on Hex isn't as the one that's performed really well on the back testing is actually Bitcoin and Ethereum.
Okay.
The back testing there is really good.
Well, if Hex was more mature, like if Hex was more normal and didn't have that crazy split event, like I think things would be different.
Yeah. And so, and of course, you can't factor in those things, but yeah. So the and that's how I like when I was building it, I was using that like back tester thing to kind of optimize it, and across a bunch of different markets. Like I wasn't just looking at crypto markets. I was looking at like. Here, I'll pull it back up and then I'll show kind of just some different markets. We can just look at, so like I was looking, of course, Bitcoin, I was looking at gold. You look at that, it's pretty good at, especially things that kind of range. It actually is really good at sniping these lows.
Gold. That's funny.
So gold
is just crypto for boomers.
Coffee. I was actually looking at these contracts for difference on coffee.
Really?
Yeah.
So commodities it works well on?
Yeah.
Okay.
So, coffee mainly because someone that I met someone at a wedding who works in finance at one of the big coffee companies. And she was telling me that how like her and her teams trade these coffee futures. And I was
just telling you how she insider trades.
I guess the outcome was that the coffee you see at the grocery store is actually some of the highest quality coffee there. And that the prices, like the changes in prices on the chart end up in changes in prices at the grocery store like months or years later.
Wow.
And so those are kind of my take. But so like so I'm always looking at the coffee chart because I think it's kind of interesting because it's a commodity that like the whole world uses.
Yeah. So the price lags. So the price in the stores lags very much.
Yeah, just because there's more like sensitive, like the producer's sensitivity to price change is different than like the consumer sensitivity, and so they trade these contracts to help mitigate the change in the price at the grocery store, pretty much. So like you as the consumer don't have to bear the impact of like how different weather patterns may cause production to change from year on year. So it's very interesting to learn about.
Nice.
About that. I think chickens. I think hens are what they're called. Let's go to the futures. Lean hog futures. Let's see the lean hogs.
Yeah, show me the hogs.
So I mean, it kind of, I mean, it's kind of everywhere you see it. Maybe, I don't know. I haven't really looked at bonds. Let's see what types of. Yeah, so the dip catcher algorithm perhaps signaled, maybe this one you should look on like the weekly or monthly chart. Perhaps this signaled that low rates were coming to an end.
Wow. That 2021 COVID dip? Yeah.
Yeah. So I don't know. It's what I use on all my chart. Now, I guess now that we use Deck Screener a lot more, you can't pull it up on Deck Screener, which sucks. But yeah, dip catcher algorithm. That was fun. That was a year ago now. It launched around February last year.
Nice. Well, hey, all 130 of you guys, if you got any questions for dip catcher, now is your time to ask. Yeah, man. What else? What else did we not cover?
The Gophers roof pool happening.
Right.
I guess
it's the roof pool. Let's talk about that.
So yeah, the chief financial officer of Gophers, Minty Big Bank Burrower, she has announced that sometime this week could be, may have already happened. I don't know. I haven't looked at the chart. That all the Gophers that remain in the sell side of the V3 liquidity pool are going to be pulled and burnt. So basically decreasing the total max supply of Gophers that are ever available, and just removing all the Minty Burrower managed liquidity in that liquidity pool from the sell side. So big reduction in supply and big reduction in Gophers for sale in that liquidity pool.
Are you able to do that on Pulse Chain, or are you using like 9mm to do that?
So the liquidity pool on Pulse Chain is on the Uniswap fork contract. So like the V3, like Uniswap V3 is a contract copy.
Oh, so it's on the existing original Uniswap fork?
Yeah. And that was just because it was tried to be put on 9mm, but because Gophers, the ERC-404, it has something that, like, there's a step in the contract that where stuff happens when on every transfer. Some contracts, they like don't allow tokens that have any on transfer action included in there. And so there's a function in the Gophers contract that basically turns off that NFT minting and burning step and you use it for smart contracts that are going to be holding these tokens, just so from their perspective, they think it's a normal ERC-20. So it was easier to deploy the liquidity pool on that Uniswap fork than on 9mm. Is basically why it's on Uniswap instead of 9mm. But yeah, it's going to happen on the that Uniswap V3 pool on Pulse Chain, and it's going to happen on the Uniswap V3 pool on Ethereum.
Cool. Are we bullish on Communes? I am personally. I don't know how you feel about Communes.
Yeah, I mean, I think that the economics are a little better than Hedron for that same kind of use case of like a bonus hex reward. I don't fully buy into kind of the like, this is going to pump and it's going to cause hex to pump, because it, like, the act of it pumping is like actively causing hex to not pump, and then anyone realizing that pump is just canceling out the pump for later. And so I don't fully like it makes sense on the first two steps of the sequence of like calm price up, encourage max length hex stake, because now you get this free reward that could exceed your value of your hex stake. And then, but then like you're claiming that, and then those people are now selling into that. And so like the first two steps make sense, but then the next two steps of calm price down, less hex staking.
Well, I guess it depends what they do with the calm. Like, does everybody sell the calm for hex again to have more hex, or do they sell it? Because either way, if they sell it, yeah, the price goes down again.
Yeah. And even if you sell it for hex and not just for dollars, now, like, because there is also a calm dollar liquidity pool and a calm hex liquidity pool and a hex dollar liquidity pool, you're still introducing more calm into the liquidity pool that comes from inflation, because that's where all the calm comes from. And it And so as they rebalance, so say that COM-HEX ratio changes, and now the Hex USD pool and the COM USD pool are now arbed to close that spread across the three. It turns into effectively sell pressure on COM, even if you're selling into Hex.
Well, there's part of like that might be part of, and I don't fully understand this aspect yet, but Johnny Sachs has been trying to say that the INC COM pool is where the liquidity should be. I don't know if that's like some kind of keystone thing.
So I guess if the if it's in an incentivized pool, then is that what he means? Like an incentivized pool, or like the actual ink?
No, like the ink token is paired to COM in his perfect scenario.
Oh,
And
I think in his perfect scenario, he should pair the COM to something like Gophers, something that like has very thick liquidity and is deflationary.
Well, he was saying if we can get to that level of liquidity that Gophers already has, yes.
Well, yeah. Well, I would choose even Pulse X. I think would be better than. I mean, Pulse would probably be the best pair in general, because if you want that thick liquidity and something that's at times deflate. I don't know if Pulse Chain is actually deflationary now with the burning relative to the validator rewards, but that would be my guess. Either something that's like mega deflationary and has chance of like mega pump, like Gophers, or something that is like big and thick and liquid and like widely known and maybe more stable. But
I think he was going for something scarce, like something that will asymptotically,
because the ink inflation. Let me see if my site's still works. When the Explorer changed, inksupply.anvil.app, I think is what it is.
I also don't even know if there's like a happening built into ink like originally was talked about.
So it's not maybe the term happening isn't quite right, because it's not like a single day happens and then now the inflation cuts in half. What it really is that over time, because the ink supply inflates in the same way the Dogecoin supply inflates, where it's a fixed number of units per day. And so every day, because it's a fixed number of units in the numerator and the denominator is increasing because every day that goes by, the total supply grows, the percent as a whole on each day is slightly less. And so over time, like over the course of a couple of years, the annualized inflation in the ink system will be half of what it is today, but it's not like it happens all of a sudden.
I see.
But it also could, like, because the ink supply inflation is actually determined by a number set by the
DAO
chef contract. The master chef could shut off ink, like new ink emission. Like the master chef could go in and set the new ink emission to 0. And then there's no incentivized pools, but then there's also no ink inflation.
Could you have a scenario where the voters are given ownership of the DAO of the master chef contract?
Yeah.
So ink holders can then vote on how much to continue to emit?
Yeah, they could, if the owner, or if say they created a contract that was like a wrapper for those, like the owner, like there's functions the owner can run, like setting the pairs that are incentivized, the weights of those, and what this top of funnel value is. They could create a contract that that wraps those functions, and then those function, and that contract has like a voting mechanism that if you hold ink, you can have it, because now that contract is the owner from the master chef perspective. And then if that is now governed by the ink holders, here, let me show you this is what I mean.
The ink cells.
Yeah, the ink. So this is this is a site I built just to track the inflation.
Yeah.
And so like on day one, when the supply went from 216,000 units to like 280,000 units, that if you project that over a year, so 365 times whatever that percent is, that annualized inflation was like 24,000% annualized inflation. Now it's, the annualized inflation is about 133%. And that's because you see, like, this is the supply. So it's like slowly inching up, and so
it goes down on a curve, but that curve ends up flattening out to such that 1 year is almost a happening every year.
Yeah, so like right now the like annualized inflation is 134. So when the annualized inflation was 270 as of October. So since October, the annualized inflation is cut in half. So every couple of months it is lower, but it's not like, and that's like with Bitcoin, the halvening that takes place, it has such an impact because it's abrupt. And where it's like suddenly it cuts in half. Whereas if it was more gradual, the Bitcoin chart would probably look a lot different. So because there's like that hard cutoff at that time, it has more, as people price it in ahead of time, and from the after effect of new miners, their revenue is now cut in half. So now they have to sell at higher prices in order to break even if all other things remain constant. And so that like
it seems obvious that you should do things in a gradual fashion, like a coded curve like this. Stuff like this just makes Bitcoin seem antiquated.
I don't know. I actually disagree. I think that
Really?
Anytime there's like a hard change, it introduces volatility, and that volatility, like that's a source of opportunity because it gives a chance for price to be low and then price to be high, or price to be high and then price to be low. And so I actually like that it's like, because if you compare the like Bitcoin versus like Dogecoin, I mean, this is the exact emission schedule of Dogecoin, what you see on the Ink one. But
I didn't know that that's new to me. I thought Dogecoin was literally just a copy paste of
no,
Litecoin.
and maybe Litecoin's the same too. Then no, I think Litecoin has happenings. It's not a copy paste of Litecoin, but it does something called merge mining, where I think like a valid Litecoin block can also mine Dogecoin.
Yeah. I've heard that.
But I think that the hard cutoffs are pretty. I think it injects life into the system.
Well, you've got this date that everyone can rally. Like the halvening day has become like a thing in culture. Like everyone's looking forward to the halvening, but it's not as smooth. It definitely creates volatility, I guess, as miners try to gear up for that or gear down.
Here, I'm going to send you a link on Twitter to Hex actually has something, or it had something. It's like this that I called the tenthening, where the big or the Hex inflation after big payday, like the day on day inflation cut by about 90%. So it cut by about a tenth. It's on a screen that I can't share on here, but
Sure.
it's the but like there's an image there that shows how the effect of all the Hex stakes from before big payday kind of create these like big waves of like where a lot of Hex stakes are ending at the same time. And it's kind of like these like Bitcoin halving, because after that Hex stake, after that inflation is realized, now it can't inflate at that same rate. And
I had a similar thought that it would be very cool. Yeah, because those pre-big payday stakes add the most to they have the most to do with the future price of shares, right? Like those guys got in way more shares for a way lower price. If there was a way to chart specifically only stakes, I mean, you can do this on Hex.vision, like only stakes made before November 20th, 2020, which I think was big payday. You could see the future expected supply coming out and kind of chart that. But yeah, if there's some more math that you've done, that'd be cool.
Yeah, because it centers around like 10 years from that. So like in November of 2030, we'll see it. And then like 10 years and then the max length time. So like those are going to be where most of the inflation from pre-big payday happens, is centered around a couple weeks in 2030 and a couple weeks in 2037 or something.
Wouldn't it be 2035?
Yeah, 2020. Yeah, 2030. 2037 is when the maxi ends. That's all I was thinking that. But
okay.
2035 of so there's like a couple of weeks that will account for most of the Hex inflation.
Is that because so many people just made max length stakes, and then there was also that that confusion about is 10 years better than 15 years? So you had like two waves.
Yeah, I mean, I think a lot of people were doing 10 years because you got the full
maxed out LTV. Yeah,
and you're for a shorter period of time. So it adds up. Like there's opportunity costs there, because if you just stake longer, because you'll never get that lower share rate back. But I think both are good choices. To me, honestly, my sweet spot now is actually 7 years. I don't know if I'll ever stake longer than 7 years, or hold a stake pool longer than 7 years.
I saw you said that in a tweet. Well, what's your reasoning?
Because the 7-year mark is when like a max length stake becomes basically you can get your principal out.
Yeah.
And so like if there's a chance that you might want to do that, you might as well just stake for 7 years, and then you collect all that principal and your yield from 7 years. And in the event that I don't think this will happen on Pulse Chain, but in the event that in Ethereum the max length stakes become just truly infeasible, then I think you're going to want the 7-year ones. 7-year also spans like 2 cycles, and so I think that like say you sit through two bull and bear cycles in a 7-year stake, and then your stake ends during a bear cycle. Now you have your 7-year stake liquid, and then maybe a bull cycle starts, and maybe that third bull cycle is just going to be crazy. And then now you have a bunch of liquid hex that you'd earned for 7 years. And then the earnings from price appreciation multiples are way greater than any incremental earnings from, getting more T-shares for longer. And so the ability to realize gain on that, I think is greater, which still balances like pretty long, earning at the 7-year rate, which is, instead of getting like three units per, or 3 T-shares per, like, basically you're getting like a 10-year stake or longer, you get like a 66% discount on your T-shares. On a 7-year stake, you get like a 50% discount on your T-share. That's good enough for me. Well,
I'm looking on like hexcalc.net, and it's the APY on 7 years is about over 20% still.
Mm-hmm.
Pretty good. And then, like you said, it's more about when are you having these stakes ending? Are they ending in market euphoria, or are they ending in bear markets? Because it's not going to matter if you made 20% but dip 90. Even if you made 20% for 7 years and dip 90%, that's, well, never mind. The math isn't going to work out that way probably. But I also guess that according to your logic too, that you might as well not even ever stake natively again, because pooled 7-year stakes would be the only way to start a stake.
Yeah, for sure. Pooling, I'll never stake native again.
Bold claim. I think it's only like, it makes sense. Like, it's very sound. It's just for me, I'm a creature of habit, and it's like, something feels wrong about the new thing. But in this particular case, this actually probably is a better way to do it. Given that you've established the diamond hands principle, it took me a couple of years I'm so accustomed to holding at this point that I don't think holding liquid Deci, like I have zero urge. Like, there's not a bone in my body that wants to click sell on that thing.
Yeah.
Like, other people because they haven't experienced real long-term holding yet.
Yeah. And I think I think that people don't need help from themselves, because I think that people have it within them to garner the resolve to not hit the sell button. But also sometimes selling is a great choice. And if you need to sell, you need to sell. Like, there's never any shame in selling. So I'm more on the side of, like, if you really feel the urge to sell, then it's really not the worst thing, because, worst case scenario, you sell and the price goes up, but best case scenario, you sell and the price goes down. So it's like, there's still a chance that your compulsive sell order may work out for you.
Yeah. You're a believer in the people. I see. I do want to give everyone the benefit of the doubt, but I know myself as well. Like, from experience, you couldn't have told me, at the beginning of crypto, to hold something and just wait for 5 or 6 years. I needed to be impulsive, and I needed to be dumb in order to learn.
Yeah.
So, I don't know. C'est la vie. Henry says,
"Are you going to stake party for 100 years?" Is what you're saying?
I want to be alive, and I don't necessarily believe in giving my future children a handout. So I might not do that. They got to work for it, damn it. But 100 years, at that point you're talking about. Apparently our telomeres like only give us 120 maximum years to live. So unless we could figure that out with aging, like how to rebuild our actual DNA, I think we max out at 120.
Really?
That's what I've heard. That's what I've read.
Makes
I don't
sense.
know. Yeah. So can we talk about what happens with a stake pool token when the stake ends? Yeah, I'll let you take that.
So when the stake ends, so there's so to claim the hedron and the COM is only claimable on stakes longer than some length, but assuming it qualifies for the COM rewards. First step is that you, before the stake ends, you run as the stake ends, you run a function that's in the dashboard that is called initialize end sequence. And then that basically sets a timer where you can run all the functions for claiming rewards. So you run that initialize end sequence, and then it gives you a period of time to run the mint com function and the mint hedron function. And then you can, and then it also takes a snapshot of who held the pool token at that time. And then after that little deadline passes, then you can run the end stake function, which then activates the minting and redemption. So if you held the pool token, you can now either add more to the pool, or you can claim your hex from the pool. And if you held during that process, you can claim your cut of the COM and the hedron in there. So when this is what, because this one has the hedron and the COM going to these pool holders instead of the older stake pools, there's that extra step as it ends to claim those rewards.
Do you think it's ever possible that someone forgets, or that collectively an entire group forgets to mint common hedron, and then they just mint hex without the bonus coins as well?
Yeah, so if you forgot to do it, it would just actually roll forward into the next time.
Oh, so it's claimed by the code. It's just not claimed by the users.
Or no? Oh, so okay. So if it's claimed in the stake, then but the user doesn't claim it by the next go around of the stake, then that just rolls forward. If you don't claim it, this whole ending sequence is actually designed to where, like, if you just didn't take any action on the hedron or the COM, that nothing would happen. There's like a 4-hour window that you have to wait, and then it just ends like normal. And then there's just no COM or no hedron to claim.
Could someone ever forget to claim COM or hedron at the stake level?
Yeah, and nothing would happen. It just wouldn't get claimed.
Okay. Yeah.
Yeah.
All right. Makes sense. I hope that makes sense, Harry. Who can claim party? Well, we said at the very beginning, but we'll say it one more time. Anyone that held the perpetual tokens, Desi, Maxi, Base, Trio, Lucky, anyone that donated to the water token, anyone that bought a dip catcher algorithm.
Yep, dip catchers included. Same with Poly.
So Poly people.
Same with Teams. Same with even if you remember the gas bridge when Pulse Chain launched and no one had gas, and then there was if you validated a gas bridge thing, you got a tiny it was very small. It's basically nothing, but they were actually included in the tally.
So many Easter eggs here. Basically, if you interacted with any of Dipcatcher's stuff, you're gonna be all right. And if not, that's all right. There's a little dip right now. If you have party tokens and LP pools, do you earn rewards?
No.
Nope.
Because the whole point of the party liquid holder rewards is to incentivize people to just do nothing with their coins. I think there's too much fiddling around, like nickel and diming for like nothing, and so the party liquid rewards was meant to encourage people to simply hold their tokens. And so if you're providing liquidity, you're not holding your tokens, you're taking on some other strategy. And so those are basically, there's a function that the pool party lifeguard can run after about 2.5 years that can go in and claim unclaimed rewards. And so the unclaimed rewards will probably be liquidity pool rewards. Is
that what you called the owner function, lifeguard?
Yeah, it's
the owner role.
Yeah, the lifeguard can claim unclaimed rewards. It can decrease but not increase the minimum bid on the auctions. So it can always, that's in case party price just moons and it's too expensive to start auctions. It can decrease it. It can never increase it though. And it can, what else? The lifeguard is it can set the URL for the name tag NFTs.
Okay.
And so those types, the lifeguard cannot mint new supply. It cannot block your coins.
Yeah.
It can, but it can
limited ownership. It's a Master Chef type of.
Yeah,
deal.
I think owner is such a poor name choice for like Open Zeppelin's owner, like ownable library.
Yeah.
It's such a poor name choice because like owner means a whole other thing.
Yeah,
it's really
and most meme coins like they brag about renouncing ownership, which is good in just a meme coin. But it's like a lot of auditing companies will pick up, hey, you didn't renounce your ownership, and it's like, well, yeah, but it's also the owner can't really do anything other than this very limited stuff. Yeah. And I'm sure if Pulse X had an audit, you see the same thing, right?
Yeah, yeah. It's a poor name choice when it's like an important role. You know, like when the max downside of having like an address that can run certain functions on behalf of the contract, like the max downside of that is so limited. Like it's, you know, it shouldn't be considered like own because you don't own it. It's like you can kind of I view it more like stewardship. It's like there's, you know, where it because in some of those things you can offload to like a voting mechanism, but sometimes like that may not be for the best.
Stewardship, yeah, it's a tricky because it's just a trigger word, right? It's supposed to be decentralized, but you know, within reason as well. People that understand nuance, I think, can understand that. Do you see a potential alt run happening even though Bitcoin is rallying?
I mean, there's always an alt season somewhere. Like
we had like a mini one within Pulse Chain.
Yeah, we've had two now.
yeah, that's true. It's true. I was the first one I aped into PDI. The second one I aped a little into ZKZX. I'm out of both, other than my initial PDI position. But yeah, they're just so compelling. I can't help myself.
Yeah, and I think that like in general, the like alt seasons I think happen kind of at 2 points. One is at the tail end. Like I'm talking like not these like kind of like localized alt seasons because there's always an alt season somewhere. Like
it's very subjective. It's very subjective.
Pumping. But like these ones that happen more as a result of either at the tail end of a bull cycle when the people that missed out on the easy gains from just buying Bitcoin, they want those gains, but they want it now. And so they're willing to go up and up the risk profile. So they're willing to take more and more risk on stupider and stupider shitcoins. And that demand is what drives those like kind of like alt season type of activity. And then likewise at the, like on the other end of it, like at the end of a bear cycle, when people are desperate to make it back in one trade, they're willing to like up and up the risk tolerance. And so then that causes some like, and I think that's what we saw in like the like PDI and Atropa thing. Like Atropa's kind of grew together. Yeah. And I mean, right now there's like a little mini bull run going on in Gophers. Who knows, you know, what else that may extend to, but the, you know, these things kind of, and I think that like more specifically the PDI, that was when like peak pain was going on in the ecosystem. And I think that was more like the make it back and all trade kind of suspending disbelief type of strategy. And so I think that that's kind of that like tail end of a bear market. Like
I think to me, Bonk kind of symbolized the tail end of the bear market with peak degeneracy.
Yeah.
That whole run on the Solana stuff too.
Yeah. Oh yeah. Especially because Solana had a pretty painful bear market because of all the FTX stuff.
Yeah.
That like, and I think there was like people trying to like a lot of like VC type or people that have like huge exposure to it were almost trying to like subsidize something going on there. And so
exit liquidity. Yeah.
Yeah.
Of course. But yeah, for me to answer that question, I would say our ecosystem can be decorrelated. We are different and weird enough to not have to abide by the typical Bitcoin trickles into Ethereum, trickles into altcoins. Like all it would take is, you know, a move from the origin address or a giant legal battle victory or something like that. Any kind of black swan event that's positive could happen within Pulse Chain. We could get who knows, some really awesome new innovative thing that's only on Pulse chain, that doesn't start on Ethereum, right? Or it just could be. I think Hex, Pulse chain, and Pulse Hex can definitely pump despite Bitcoin rallying, and doesn't have to abide by the same rules as we've seen in the past in localized trends. In the greater trend, yeah, we're still coming out of a bear market. We still have the federal reversal that we're waiting for, the happening, and in general for the macro markets, I'm thinking 2 more years of positive price performance, hopefully, unless we, God forbid, of cyber attacks and all that crap. Trade Bra says NMN and NAD boosters. Yeah, I take liposomal NMN from Renew by Science in powder form, and I just put it in water every morning. It's great.
What is that?
Wonders. Nicotinamide nucleotide or something like that. It's basically just a kind of a B vitamin that gets absorbed even better by your small intestine than like most other stuff, and it's one of the leading longevity supplements out there right now. I think they also just recently invented an even better version of it, but strangely enough, Tony Robbins has that patented. He's going to be launching it pretty soon.
All right.
So
I wonder what the effect of all that is. Like when I look at that guy, what's his name? The guy who spends like millions of dollars to like restore his youthfulness.
Brian something. The vampire. Everyone calls him a vampire.
Yeah, he has the same name as the Liver King.
Really?
Brian Johnson.
Brian Johnson.
Yeah. I'm like, okay, you do all this, but you're probably gonna like get in a car wreck. Or like some other high probability way that people die, maybe. Like,
well, Richard says accident. I mean, if we live forever, we'd die at 600 by accident.
Yeah,
that's the stats on that apparently. But that would be the irony of the universe on Brian. Just walks out, gets hit by a bus.
I never got real into the like longevity stuff. I think there's like some natural order in like kind of what you said about the 120-year like, lipids or whatever that how it maxes out, and like I mean,
you think we're supposed to die? Are you a pro-death conspiracy theorist, sir?
Well, I think there's beauty in death and regeneration, and like to dust we shall return.
But lizards can regenerate their tails and their arms.
Yeah, and I think that like, and I think that like if you procreate, that like your spirit lives on, and that's like probably the thing that.
Well, you allow a new spirit to enter the world.
Yeah, but like you were, I guess, part of it. And I don't know, and also like maybe I feel this way because like I have family members that live past 100, and they were like, bodunk people did fought in the wars and just ended up just living forever. So maybe I feel like I will live very long.
Me too.
But
yeah, I mean, all this longevity stuff, who knows if it's gonna because really just basic human needs like sunlight, good food, family, community, and positive relationships in your life is the majority of it. I think the oldest woman in the world lived till 120 something, or I don't know exactly how old she was, from France, but she drank a glass of wine every single day, so I know my grandparents lived pretty old and smoked cigarettes for the large majority of their lives. We're too stubborn to die in this bloodline. So
I think what kept my grandpa alive for so long, he went to the casino like a couple times a week, and sometimes I would take him, I would drive him there.
Nice.
Just like walk it, like literally have to like wheel him in there. Yeah. And I think that there's something about like the suspense of like on the slot machine, like when you hit the button and then like I can see the look in his eyes, just like waiting to see if it. I think there was something about that cycle of like suspense and that dopamine rush from that I think actually kept him alive because he was sick for years and then just kept chugging along.
It's funny, yeah. That's my grandma drinks over a pot of coffee every single day. I think she's purely caffeine fueled at this point, and it also reduces Alzheimer's and stuff, and she's still pretty sharp,
Maybe the dopamine rush that we get from shitcoinery will keep us alive forever.
Yeah. So what you're saying is everyone needs to gamble more. All right, thanks.
Yeah.
You guys all need to go to Vegas. Harvey Diaz, I'm more of a beach person. Being able to go for a morning run on the beach has been amazing for, I think for me personally. Not everybody's able to do that, but something about running on the sand with the water, like I think it's good for people. But nicotinamide mononucleotide. Yes. Look into it. Wonderful DNA repairing. They even say certain music is supposed to be DNA repairing, right? 432 hertz. There's this conspiracy that back in the day, who was it? The Rockefeller Foundation actually adjusted the global tuning of all music from the A note that used to be at 432 hertz. He adjusted it up to 440 hertz, which is about as far as you can get in between octaves to be offset, right? So apparently all the standard tuning globally being 440 has made people more irritable, more, whatever. But when you listen to certain songs tuned to 432, they really do sound very nice. And like, there's a lot of like background meditation or like lo-fi hip hop beats tuned to 432 hertz that I'll just put on in the background.
Mm-hmm.
And you can call it woo woo, crazy, whatever, but it sounds good. So I like it. I don't know if it's doing anything to me. Yeah, 432. It's also related to the Earth somehow. It's like the not the Schumann resonance, but it has something to do with the diameter of the Earth. Measurements and all that, but that's just a conspiracy, is that those damn Rockefellers, frequency adjustment is real. Yeah, 5.8.
Yay!
That's right. What do we got in the chat? Degen GPA. Yeah,
I guess my longevity is I just pound oranges. I eat like 3 a day.
You're big on oranges, yeah.
My whole life, big. I have a real passion for citrus, I think, because like
citrus freak.
Yeah, just like there's so much variety, and like it's almost like every season there's like a new type of orange that you can enjoy. And yeah, just the satisfying, like I feel like there's nothing that nature intended you to eat more than something that comes in like a nice package, like a nice bright package.
Yeah, it's bright orange, it's big bulbs. They're just like, eat me, bro.
Right in reach, and you can save it. You can pre-score, like you can pre-cut the peel and keep it closed, and then keep it in your pocket or your backpack, and then wherever you get where you're going, you just like easily just like peel it off. Like there's nothing that was more intended to be eaten than an orange.
Well, yeah, you eat the seeds and you shit them out on your hunt, and then grow some new trees.
Yeah.
We were talking before the green room, but yeah, oranges in Puerto Rico are called chinas because they used to come in boxes that said made in China, and so instead of naranjas, they're actually chinas. Did you know Jacob Rock died today? No, I did not. Sad. Well, people.
Was that the Rock's younger cousin?
It's some kind of a symphony guy, autistic teenager.
No. I think he's talking about Jacob Rockefeller.
Rockefeller. Oh, okay.
Unless he's talking about someone else.
No, never mind. I'm just Googling. Jacob Rock. Well, didn't one of the Rothschilds recently die?
Oh, I thought maybe that's what you're talking about. I don't know who Jacob Rock is. Then I was wrong. I was thinking Rothschild.
Yeah, I don't know who we're talking about anymore, guys. Rothschild, yeah. The true king of England.
Oh my God. In other news, Gophers is now clearing its all-time high versus Pulse. It is now 7.95 million Pulse per Gophers.
God damn it. I'm just gonna become so jealous that I'm gonna start shilling Go Farts.
Yeah, you're a
I'm a Go Farts maxi. Screw you guys. Susie Q is gonna go eat an orange. Jacob Rothschild, haha, yeah. He's now Rothschild. Lol. They're not all bad. Like some of their kids, I think, tried to turn things around, but yeah, it's also easy to. I don't know. I'm hesitant to like blame one family or something, but when you look at the actual history, it's hard to deny that some of these, I mean, it's just, I mean, we're going to have the new versions of that in the next 200 years as well. We're going to have, who knows if Elon Musk starts a dynasty or something like that. And, or whoever tends to take the most power, it always accrues to the very top 0.001% throughout all of history. But yeah, they have been more in the shadows, I think, in the past century.
Yeah, now things are so public. It's all. I mean, it's just the game changes. But there's always going to be like overwhelmingly powerful, wealthy people, and like I think at those levels, like there's really no rules. Maybe the only rules will be like the rules that crypto enforces, but like there's really no rules at that scale.
Well, imagine if they get to feed the AI too.
Mm-hmm.
Like it's more about who's in control of the inputs there. Yeah. And so if Microsoft owns ChatGPT, and then didn't Goldkey do some crazy analysis about who owns like the top companies and how they're all owned by shell companies and they all have a stake in everyone else? And it's just like like they're laundering ownership.
Yeah. Well, part of it is because like a lot of people's like stock portfolios are held through like either brokers or IRA accounts or like different retirement accounts, which are really just like you're buying exposure through like a fund that holds funds. And so like it turns into like a big kind of circle of just entities that are owning each other. And then there's like the actual like ownership, but then there's like the beneficial ownership. And so there's kind of a difference there. But yeah, I mean, it like, especially things that like where a huge amount of their like inbound buyers are just like people whose 401k is automatically putting part of their paycheck into some basket of securities that like whatever fund that they are in,
Vanguard or whatever.
Yeah, like then it's that's kind of why it tends to do that. But it's, but also there's like a, like a people that hold assets in a more anonymous way that feeds into that as well, where like you're not holding the asset itself and you don't have to do the reporting, but something that you owns it, or something that owes you that owes you the asset or owes you the proceeds of the asset. They own it, but then like offline, you are the person who actually owns it. But yeah.
Yeah, it's a rabbit hole, guys. Now people are going back to Gophers. Gophers, woo! Everyone loves the Gophers. What have you done? Any alpha? Yeah, basically what we already said earlier, Stizzy, is that the alpha is that a lot of the liquidity and therefore the supply is going away from the initial locked supply. So I think you're calling that what is it? The roof, pulling the roof out, a roof pull.
Yeah, roof pull,
which is good. I mean,
roof pull.
Yeah. Gophers roof pull. So I mean, is it true then that you can just keep selling and buying the same one to get a more rare gopher?
Yeah. So what that means is that you actually have 6 NFTs, and one of them is displayed at any given time. Like, because you could just like if you have 2 ads, you can send it back and forth and shuffle till you get the one you want. So if you can do that, that means you have all of them. But then, like, so where the scarcity is really baked in is in the like how low your ID number is, because every time you recycle, it increments your ID, and so the lowest ones I think are most scarce from the NFT side. And like I have some there's some concepts that I've kind of prototyped and been thinking of for like some type of like, here I guess I'll drop this, just an idea for now. This is vaporware. It's definitely not like anything looming, but like a contract that would emit a fixed number of the Gopher NFTs that are where like the ratios, like the proportion of the probabilities of which one you get, where those would be enforced by like an external contract. So say like 100 of these are available, and if like 7% of them are the neon character or something, then only 7 neons would be available. And so in order to get one of the ERC-721 NFTs of neon, which doesn't change, just normal NFT, you have to come and burn a ERC-404 neon. And so it'd be like a race to like the first 7 people that get that one could burn it. You know, could they come and burn that 404, they get the 721. So like ways like that to kind of extend upon it and bake in that the scarcity in that way.
But what if you buy the Gopher, you send the NFT off to some other address, and then you sell the Gopher token?
So as soon as you like the token itself and the NFT,
They're the same. Okay.
Yeah, they're tightly cut, like they're one and the same. Like it's
So you
like
can't do that.
You have the balance greater than 1, then the contract, like when looked at from the lens of like an NFT interface, it appears to have an NFT. But then also when you send the NFT, like the act of sending the NFT is also sending the balance. And so it reduces your balance. So it, when looked at from the lens of an ERC20 interface, the balance decreased like an ERC20 would. So it's like there's no separating them.
But there's a threshold of you need a whole number of them to have the NFT activated.
Yeah.
And if I send you 1.5, I'm still sending the 1.5 balance. Yeah. All right.
It's pretty cool. It's actually really, I think that there's something really special in that ERC-404 concept. And at least of all things, you know, because like there's always a new mega trend in crypto. So many of the big mega trends have already kind of come and gone. And I think that this 404 concept is like, it taps into things that are like where there's like real demand for, like there's real demand for digital collectibles and there's real demand for DEX trading. And it kind of captures aspects of things where there's a lot of demand, but it's kind of packaged in a new format. So I think that like there's a good chance that this 404 concept in a bull run is very, very popular.
Well, what about Tang Talk? Do you know that one?
So I may have one because I have a bunch of HOA.
Yeah, somebody gifted me a Tang Talk wireless, and it is cool. I don't think it's a 404, but it has what I imagine being like cross-chain potential of like if you can kind of chat and make NFTs a social game, like maybe that becomes stickier, especially, you know, if you're trying to reach out to other blockchains. But I don't even know what format it is or what the technology is. If it's just a standard ERC, whatever 721, it's something I've never seen before because you can actually you click on the picture and it's like you could type in the little walkie-talkie and send a message to somebody, to all the other walkie-talkies out there.
That's cool.
Yeah.
That's a really cool use case.
Yeah. I mean, it's nothing I've seen. And apparently they're going to keep adding functionality. So,
well, so, I mean, if it's like, if that transmission of the information, like whatever the message is, if that's off chain, then like, you know, it could kind of plug into any of the chains and like,
it's transmitted over IPFS, I believe.
Okay. So if it's IPFS, then it may not be related to the chain that it's on. And so like but like if you're, I don't know how it works. I've seen the Tang Talk thing, but I haven't looked at like the details of how it actually.
I was trying to find documentation, but the website just doesn't have much on it. Like I want to read about how it works. I guess the messaging is stored on IPFS, but the NFT just is like the window into it.
Yeah. So if it is cross chain, is it on numerous chains? Is that what you said?
All I know is that they're going to collab with a chain called Chia.
Oh yeah.
I think Chia itself is an interoperability protocol, kind of.
Well, if it's like, if the NFT is the window, and then what that probably means is that there's a, like, I mean, it depends on how like secure, because I mean, if you can just look at it, then because it may not be like that may not even be an issue, is if anyone could just look at it. But if you need to have the like if you needed the NFT to like decode the data that's stored, maybe it's encrypted, and then if you have like a valid signature hash, you can decrypt it basically. So if that's the case, then like this, like the signatures, those are like across any chain. Like that's not necessarily related to the chain that you're on. That's related to your public private key pair. which that is chain agnostic, at least for EVMs. And so that may be how, if it is cross chain, but or if it's like where you have to have it, then the information may be like encoded in IPFS. And then if you have like a valid signature, it produces you like a decode key. But I haven't looked at, I haven't, but that if I was to make that would be some type of signature scheme, which lives off chain. That's more related to the private public key thing.
Yeah. I mean, there's probably some more information in whatever this Chia network is and why they're partnering together. But I don't know. There's so much to keep track of right now.
I know it's pretty, I think that's a good thing, like for Pulse Chain as a whole, that there's just like so much stuff. Maybe it's detrimental to individual assets that, like, probably the thing that gets it the worst is like Hex. Like Hex went from a time where it was like the only game in town and there was one of them. And now now it's a situation where there's two of them and there's three other assets created by the same guy and there's all these other assets. But I don't know. I don't think it's any one person's responsibility to like maintain that. Like this, it's all, this is a zero-sum game that we're all in together. I think there's like kind of like a social connection aspect to it, but like you can't assume that everyone is going to do things that benefit the things that you own. And so I think it's probably good that we cut right to the chase in this way. And at least the end result is that there's opportunities, right? Like there's new high growth opportunities that are happening all the time. And that's really what crypto is all about, I think, is that like there's a chance that you can get into something early. And like if there's no stuff being built, then there's no new thing to get in early.
Well, that line of thinking is almost exactly the same as what I've been saying when it comes to like coping with the multi-coin world that the community has evolved into. Because you're not going to get everyone initially with the same narratives that you like. They might be coming and need a stepping stone. Like they might need Gophers to get exposure to Hex. Like they might not come in directly. But I do disagree that I don't think it's a zero-sum game. If everyone does hold on a long enough term, it can be positive sum. It ends up being zero sum for some people that play, but I just think given enough time, if crypto as a market asset class grows by 10x in the next 5 years, well, didn't the pie just get bigger for everyone, no matter almost what you were, as long as you were holding something that still captures attention? You need this well of attention to be maintained. Like you need somewhat of a vortex that continues to get new eyeballs or maintain the same ones.
Yeah. I guess maybe it's a blend of the two, because it's like, if like of all the people that are in now, it can be positive sum, but if you include the people that are the ones, the new eyeballs, if you include that group that are kind of creating the positive sum environment for all the people that are here now, if you include them in the average, then it can kind of go in the opposite direction a little bit, but then that group is now part of the existing group that for the next cycle with like,
right.
Assuming that the humans don't stop producing, then yes, but like over any like sample group, depending on how wide the sample group is, then
just stay in the game, like, and don't exit. Like you lose when you just leave crypto, but like I don't think the world's going to know anything besides crypto in 20 years. I think all stocks, all securities are going to be issued on blockchains. They're going to have varying degrees of centralization, decentralization. Interoperability will become so fluid that you'll click a button and you won't even notice how many networks you're hopping between. We're just waiting for that world to happen and kind of building it. Someone says I look like Paul McCartney. Hopefully not at his current age. Trevor, that's 20-year-old, 30-year-old Paul McCartney would be a compliment. Thank you. How do I like living in PR? It's great. It's not for everyone, but I personally love it. Love the weather. Love getting out of Chicago winters. And I'm going to, I'll be back and forth a lot. I do a lot of traveling, so a bit of a digital nomad, but I like living in one place during the winter and a different place during the summer. Let's see. Dip Drac streaming coming. Oh, is Drac I think he's the NFT, the Tang Talk guy. I don't know. It's unfortunate because not everyone can take profit. Well, that's what we're saying is like, if you hold long enough, like, yes, you can. But I mean, yeah, some people, they buy high and they sell low.
Like if you hold long enough and you hold the right, like hold something that continues to have some amount of demand.
Yeah.
You know, but I think what you said about staying in the game, like that's so important. Like it always happens. Like there's friends of mine that it's like by now it's like everyone that I know, you know, have a relationship with, they know that I'm deeply in this world. And but some of them, you know, it's like they get interested when like the prices are high and they're like,
Oh yeah,
the Super Bowl commercial, and like they start buying, and then they are down 70% and they're pissed off and they just like, all right, I'm done with crypto. And then like during that time is when all the like kind of those like things like Hex. Like I have a friend who was actually the first person I told about Hex, and this was in August of 2019. I told him about it, so about 4 months or so before Hex launched. And he works at like a big financial institution in the fixed income like team. And so something like Hex should have been music to his ears. And his response was, and this was like deep Bitcoin bear market, he's all salty from that. His response was, he's like, oh, don't come take my job. and like he was the first person I ever told about Hex, and he just never took any action. I tried prompting him numerous times. He's just so salty from having literally, he not like he had that much money in Bitcoin to start with, but it just marked down 60%. He's all pissed off about it. And so he just kind of removed himself from the game, and then, you know, missed out on like the whole 2021 cycle, even though I was there telling him, you know, all the time about it. And then he finally gets back in at like 2021, gets into like Cardano at the highs and, you know, buying things at the highs. And then now it's like, okay, 2 bear cycles in a row, he's just down bad and forgets about it during you know, when he's down bad, he just forgets about it, just removes himself from the game and misses out on all the big opportunities. So it's like,
yeah, all the opportunities are made, the wealth creation, the positions are made when everyone hates it, right? Yeah, people need conviction. Will is right. They're going to call it cult-like if they don't want to believe, but you have to get over your ego to some degree, or your preconceived notions of, oh, well, it's not real, so I can't touch it. That's one of the most common things I hear from not only boomers, but just classic non-believers. It's like, well, or they'll, I heard somebody quote, they tried to quote, I think it was Bill Ackman or whatever, by saying like, well, it has a price, but it doesn't have value. And I'm like, well, the price is the value. Like they're the same exact thing. Just because someone, and I might value something at a higher price. Like I value my Hex at, you know, I wouldn't sell my Hex right now for a lot higher. But that doesn't mean it doesn't have a value or a price. Value is subjective, but price is where all the values of everyone's hive mind converges in this particular point in time. Because that's the lowest price that someone's willing to sell for, and the highest price that someone's willing to buy for. Buy high, sell low. Great advice, Soylent Green. Great advice. Yeah, trading games is gambling competition, and crypto games are not zero sum. Some loses money. These tokens games are not all the same. I agree. Yeah, play games with longer term staying power, and I think we're all going to make it.
Or invest in things that guarantee 10 gazillion% returns solely from the work of 6 furry gophers.
Yeah, that is financial advice. These gophers are registered financial advisors. And you know what? It's their faces I can trust. Look at how happy they are.
Yeah, look at their glasses.
How do you think they got so happy? By giving financial advice and making promises. I do wish Richard could give promises, though. How much higher would the price be by then?
I mean, there's really nothing stopping him.
Well, at this point, yeah, if he gets a win, maybe
I don't know. I mean, I think like maybe this is where the Gophers are really innovating here, is like this whole kind of pussyfooting around, like sacrifice, no expectation. Like maybe it should be the opposite. Maybe like that you should exaggerate the expectations, and like, because it's like not like everyone doesn't know the risks involved in any of this stuff. Like if you're in this world, like you know the risks. So like I don't buy that people are uninformed of risks, and that's really like I think the purpose of the SEC is they try to make it seem like they're
people aren't honest. People all know, but when the price goes down, they want someone else to blame.
Mm-hmm.
So they're not honest with themselves. They will say that they didn't know the risk because they don't want to take responsibility.
Yeah.
That's the problem, right? That's the catch-22. And that's why the SEC claims to be protecting people. But yeah, I think at this point, if he can get an action without prejudice, or with prejudice rather, that would be I hope he promises us the sun and the moon. Last question to Tonto. What do you see happening to Gophers post ceiling ripping? Guys, stop making me regret my sale. Please. No more questions.
Probably, I don't know, maybe 10 gazillion% gains.
Wow.
Guaranteed. Even if you bought the top, you get 10 gazillion%.
Yeah, I think your doorbell just rang. It's the SEC. Minty is my tax accountant.
They're gonna have to dig underground to find the Gophers. I'm the janitor. I don't know.
Oh, right. All the Gophers, they better start burrowing.
Yeah, they told me that they're gonna get a shit cleaning robot soon, and then I'm gonna be out of a job. So they said I can clean the toilet when the robot's charging.
It's only a matter of time before AI just starts creating shit coins and then using them to build up its. Can you imagine if like an AI just becomes a crypto scammer and then accrues enough ETH and BTC to like rule the world and just has like all the. It could happen.
That's probably what is going to happen.
If you program it to social engineer people to acquire as much crypto as possible, think about how automatically already people just give their money away to faceless scammers, partially helped by AI. It's going to get weird. Harvey Diaz, hit me up if you want, man. Trade Bra, are you a billionaire? No, easy question. Billionaire in
column, yes. I'm like quadrillionaire.
Oh yeah, I'm a trillionaire at least. I might have I don't even know. I gotta count my different wallets.
Zeros, I can't even count them.
Yeah, just theoretical numbers.
See that's bullish for Calm, is because there's so many decimals that like when you type in how many you're gonna sell, your finger breaks off, and then you can't hit the sell button because you can't.
There's higher risk of fat fingering. So. That's a feature, of course. Basically everything is bullish. Everything's a pumpamental. And if you don't think so, you have the wrong framing. We're gaslighting you. All right, guys. Hey, 2 hours into it. Thanks for everyone. We actually have more people watching at the 2 hour mark than we did at the beginning. So that's rare. So
it's pretty impressive.
What do you got going on for the rest of the day? Any Gophers development?
Well, the thing I'm actively working on right now is some just improvements to the pool party dashboard with the stake pool display. So that's going to get published here in a couple hours, and then getting the Hotel Gopherfornia contract finalized for the burn. Cool, man.
Oh, I know it's a big week for you. I know we're going to have to call you by a different name pretty soon. I don't know if you told anybody or you want to keep that to yourself. We might have to change your name to Daddy Dipcatcher soon.
We'll see.
No? Okay. Yeah, we'll leave that one on the table. Stock market 0-sum 2. Yeah. Gopherfornia. Okay. Guys, thank you everyone for coming. Make sure you like, subscribe, follow Dipcatcher, Tanto Nominai on Twitter, and check out what he's built. Pool party, anyone can make their own token. You can claim your free airdrop, and anyone can make their own token that is essentially a pooled Hex stake. Remember, we can make more yield if we pool our Hex together and behave all collectively as one giant whale. It's all decentralized, audited, and trustless. So, see you guys.
Yeah, thanks for having me. Have fun, everybody.
My pleasure.